Hey everybody, Economic Ninja here. I hope you're doing great. I want to talk about the Federal Reserve and what is happening right now as the Federal Reserve is in control of a planned demolition of the stock market and all kinds of markets for that matter of fact. So here we go. First off, the Federal Reserve is handing out monetary heroin. And to give you an example of how I can explain this, ever since the Great Recession started, the Federal Reserve has been on a spending spree in a couple different ways. First off, they lowered rates to about 0.25%. They also were buying back assets. Huge, just hand over fist buying assets off the market, right? Especially distressed assets in the beginning, but they knew that they had to keep buying a certain amount of assets. A few times over the past 10 years, they tried to lessen or completely stop this, but it ended up only having to restart again after a little bit of time because the markets couldn't handle it. You see, anybody, in human beings, we all know that when you're addicted to something, let me take these darn things off. Put this on. Getting serious now. When you're addicted to something and it's taken away, whether it be sugar, drugs, anything, your body goes through a reaction. Well, the markets are no different. The fact of the matter is, especially since 2020, the markets have needed a certain amount of monetary heroin to keep them going and thriving. The facts are the body of the economy is on life support. And the way you know that is because we are at now 0% interest rates when it comes to Fed funds rate. And all over the world, interest rates were being forced down so that people would be encouraged to lend money or borrow money at low rates and speculate in all kinds of markets, from the stock market to cryptocurrencies, even in the vehicle markets. Facts of the matter are this: we need this monetary heroin to keep the economy body going. Now, right now, the Federal Reserve is threatening, I say, to raise interest rates. Are they going to do it? Nobody really knows, because a lot of people, myself included, and I'm not a financial advisor, or, this isn't financial advice, but I do not believe they're going to be able to pull it off. Sure, they might be able to do one rate hike, but the facts of the matter are, we have so much more debt compounded now as compared to what happened in 2008. It is staggering, okay? The other thing is right now, the Federal Reserve is just pulling back some of the amount of assets that they've been buying hand over fist to keep the monetary system and the economy going. So right now, all they've done is withdrawn a little bit of that. They're still out there buying like crazy. But even that little bit that they've withdrawn, the market had a temper tantrum. We like to call it a taper tantrum, right? Because they're tapering the amount of assets that they buy. So now think about this. If the Federal Reserve, they keep saying, we're going to raise rates, well, then just raise the rates. Well, the fact of the matter is, we all know they can't. Because if they did, that coupled with buying less assets would cause a catastrophic collapse in the stock market. Because the facts of the matter are, the economy is on life support. And a lot of people don't understand this. You see, the economy was on life support ever since 2006. Whatever happened in 2008 and all the fixes, the patches they put all over the economy didn't fix all the leaks in the dam. They tried to plug all the holes, the dam's still leaking. So what they do? They threw more mud on top of it. And the problem is they made the dam a little higher, so now it holds more water. So when the time comes that the dam actually breaks, there's even more of a flood that's going to hit your town. Now, I say this with a grin, and the reason why is because if you are prepared for this and you're expecting these kind of things, even though we don't know the day or the hour that this happens, but we do know it's going to happen, and you have dry powder on the side, dry powder meaning extra money, you're not in debt, you're in a position to be able to buy assets from people when they are liquidating them at rock bottom prices, then you are going to be blessed. You're going to blow up in your net worth because more people make money in bad times than they make during good times. I know it's very hard to believe, but it's true. More millionaires were made during the Great Depression than ever before, and I believe that is going to happen again. So again, I want to explain, the Fed cannot raise rates right now. They're threatening, and they may do it. They may actually do it in a couple months once they get, the taper tantrum out of the way. They slow those asset purchases so they're barely anything, right? Then they do the raising. You see, that's why a lot of people are going, well, why don't you just raise rates now? See, we know inflation is rearing its ugly head right now. Just raise rates. Stop it or slow it. But they know they can't. Why? Because the economy is literally that fragile. So, a couple things we can take from this. What do we do? First off, if you haven't subscribed to the Economic Ninja channel and you like this content, please hit the subscribe button. It would really help me out. Also, thank you for all the thumbs up. Secondly, having dry powder, actually money in the bank, right? I know there's a lot of people that don't trust banks, but I mean, you can only put so much money under your mattress. Diversify your banks. Be safe. Have a plan. Don't get into any extra debt. Pay off your debt if you can. And then be ready to take advantage of the sales. You see, there's only so much that a market can go up until a lot of people start going, this is a little heavy, and they stop buying, and then it goes down. And like they say, bulls climb stairs, but a bear jumps out a window, meaning that the bull market is nice and steady going up. But then when it turns so fast, it's like catching a falling knife. It's extremely hard to grasp. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.